Hey, what's happening, guys? Dan Darrow here with another Options and Play video update. So I briefly touched on the idea of Constellation in Friday's kind of like earnings preview for the coming week, and now I kind of want to get into the actual setup a little bit more in depth. So this is going to be a fresh trade idea going out in tonight's newsletter. STZ is going to be reporting earnings on Thursday, and it looks like a pretty good candidate for a straddle or a strangle, what we call a volatility bet. Uh, so there are a ton of different setups on stocks that are reporting earnings, right? I mean, there's not every pattern is going to be created equal. There's going to be some names that look are trending. There's some that are doing nothing. There's some that are breaking down. I mean, there's as many as many different setups as there are stocks. Honestly, I mean, there's so many different types of plays. Um, so not every setup obviously is going to be a good volatility candidate, or it's not going to be a good candidate for a straddle or a strangle. And when we target those strategies, we are basically betting that the option market is mispriced, right? That the stock has a good chance of moving more than what the market is expecting. So that price didn't move, what I just talked about in yesterday's video. You're going to have basically, the option market sets the line, and when you are betting for a straddle or a strangle, you are basically saying that I think the options are mispriced and the stock is going to move more. And there are a few reasons why a stock could potentially move more. Um, but really, the two that we like to focus on the most on are recent moves on earnings. So the most immediate quarter prior has the heaviest weight, and then key technical levels. You've probably heard us talk about this a bunch, but key technical levels for that earnings combo move. So basically, what this means is that um, the price of options can kind of differ from what the stock has moved recently. Options can be a little bit slower to catch up to, so say for instance, like I have the chart of Constellation here. So say for instance that, for 2 years straight, STZ has moved between 8 and 10 points on earnings, right? So then the options are going to be priced based off what it's historically moved, or percentage wise. So say if it's moved 8 to 10 points, then options are most likely going to be priced between 8 and 10 points. But if last quarter you can see um, there's maybe a bigger move, then it's going to take the options a little bit longer to reflect that, because the market could be saying, oh, maybe it was a one-off, and it's more likely to move in line with its historical average when it comes to these things. So that's what when I say the most the immediate responses or reactions to earnings are important to us, because it kind of tells you maybe like the character of the stock is changing, and the options aren't reflecting like the new higher level of volatility. And then key technical levels. So we want key areas of resistance, support, if the stock is in a consolidation, basically anything that could potentially create a larger move if the stock breaks it. So you're gonna get a move off of the headline release, right? The numbers are gonna come out. You're gonna get a move, and then is there any key level that if the stock breaks it, will it like trigger another move on top of it? It's almost like a two for one, what we call a two for one, like that combo move, and you really get a much sharper move than what the options were pricing in. Um, so with that in mind, let's take a look at Constellation and see why this chart is setting up well for volatility bet. So first things first, the options, the weekly straddle is pricing in about between 9 and 9.5. It was 9.5, it's closer to 9.5 yesterday. It's come down a little bit. So say like between 9 and 9.5. Last quarter though, the company missed. It's right here. First miss in several years actually, and it actually dropped, top to bottom that day about 17 points, and it broke. As you
Brent
can
closed
see,
at 84.80.
it broke this long term
$9.50 above
downtrend.
NYMEX crude.
So right now that straddle, so like the straddle for this week is only priced in 9 and 9.5. But last quarter it had a 17-point move. So there's definitely some disconnect there, right? I mean, is it, are the options just underpriced because it's moved closer to like 9, between 9 and 10, like historically over the last few years? Or I mean, last quarter it had such a huge move. Is the kind of the complexion of the stock now starting to change? And now, maybe even more importantly, we're going to look at the chart, right? So STZ, this was the day. So Constellation had a giant rally the day before they announced the CGC deal. So you can see that there was a large drop and a subsequent washout down to the 200 level after they announced that deal was with Constellation Growth. But what this has done though is really created some wide-ranging bars or wide-ranging levels on the chart right ahead of earnings. So I mean, you have a really well-defined area of resistance above. I mean, it's stalled at 220 a handful of times. It's got resistance at the 200-day. But then above 220, you can see there's this really obvious gap from last quarter. So, you have room to 220, and then through 220, there's like a huge gap from last quarter. And on the downside, I mean, there really isn't any significant area of support until 200. So with the stock at 212, right? Your major area of interest is 200. So right there, that's 12 and a half points, which is more than what the options are pricing right there. And then on the upside, through 220, I mean, like you're looking at possibly a move into the 230s. So in either scenario, we're looking at this, and you're saying, like if it moves the priced in 9, there's really a good chance that it could move much more than that. On the downside, clearly, if it last quarter broke a long trend, so if it breaks 200 again, I mean, you can see that like there isn't a whole lot until like the low 190s. I mean, it was a really aggressive uptrend in the stock. So last quarter's miss did some damage. So it's going to be important for a pretty good bounce back quarter. Otherwise, the selling could really snowball quick. So that's why STZ looks like a good volatility trade in the earnings for us. Options are about 50% of what it moved, are pricing about 50% of what it moved last quarter, and there are really clear key technical levels just outside that priced in move, which if the stock triggers it, could create that those 2-for-1 type trades that we really love, and when it comes to options, like those are the types of trades where you can really like beat the street, as we like to say. So as always, love to hear from you. Reach out, questions, comments. Always love to get feedback from you guys. And if there's anything you want to hear in these videos, please pass it along. I hope you have a fantastic day of trading, and I will talk to you guys all tomorrow.